Good morning, traders. Bennett Tyndall with tradinganalysis.com. Thank you so much for tuning in, and happy Wednesday, January 13th to you all. Keeping our eyes on the S&P futures here on the left-hand side of your screen. We're down about 0.2%. We are tracking what could be the final subdivision of a fifth wave inside of an initial impulse that started off of the March 2020 lows. So we are certainly getting a little bit extended. We've got a few signs that we are watching for to kind of help substantiate this market top. If you caught our video update from last night, we talked a little bit about those. We'll take you through the indexes and identify some of the key levels that we are watching. But before we do so, we're going to go ahead and bring in the trading analysis team, see what's going on. We've got Mr. Todd Gordon back in the house with us. Good morning, gentlemen. How you guys doing?
Good, Bennett. Hey, Terry, how's it going?
Welcome back, Todd.
Thanks. I'm always here. I'm always lurking in the background, just taking more of a back office role right now. Hey, YouTube viewers, trading, investing community, how's everyone doing? Happy 2021. Happy
second show of the new year.
Social fabric deterioration, chaos. I hope everyone's all right out there. So anyways, yeah, I'll be here just watching, listening. Trade analysis team is doing a great job guiding us through here. We've got some new positions. Interested to hear what Bennett's got for us, and then Terry on sector rotation. I got a couple new positions I've added to the portfolio. I'm almost done building the trading analysis longer term portfolio. That's what I've been doing in the background. That'll morph into the money management company that we're set to launch here in 2021. So that's what I've been doing in the background. So I'm just going to hang back here and listen and learn.
Very good, very good. Actually, you want to jump in really quick and run through your section, talk about those positions before we get into the charts?
Sure.
All right. Sure. Pass the screen your direction. Here we go.
Okay. Thanks. So Bennett's obviously going to take us through the indexes. A lot of rotation. I'm interested to hear what if Terry. I know I see what Terry's going to be talking about. We're seeing a lot of small cap rotation here. Bennett, didn't check your show notes as I should have. Are you going to hit the Russell to any degree of?
Actually, no, I wasn't going to cover the small caps today. So go for it.
Okay, cool. I just wanted to make sure. So, this is something I've been talking to the team about. There's been big rotation into small caps. Obviously, large cap tech and FANG are very much on the sort of the chopping block in terms of regulation. We'll see what's going to happen here. Everything that's happened with Trump's social media accounts. I don't know if that increases the scrutiny on these companies or not. We'll see what happens, but they're certainly trading large cap tech like they're on hold. A lot of triangles. We're seeing some weakness in Facebook, and Netflix actually came off, not so much grouped in that same group, but Netflix has come off. Facebook, Twitter, Google's on hold. Amazon's in a sideways consolidation. I wrote some calls on two of my big tech positions. I did this on a CNBC video. I'll show you that right now. I wrote calls on XLK. I've got an 800 share position. I wrote 8 calls against that Feb 21s, and I also did the same thing in Apple. I wrote in the 5 Feb, I wrote 4 calls against this 400 share position. So kind of bringing in some premium for now. It's kind of a break-even trade for now. But as I said, rotation is really what we're looking at here. And small caps, specifically Russell, is looking interesting. While the NASDAQ was struggling yesterday, small caps are doing well. And it's amazing, as I've been working so hard over the last 2 months and building the 2 main portfolios for the money management business. There's pretty good small and mid cap representation in there. So as you just look at the daily here, and I'm going to circle into the positions here in a minute that are kind of related to these smaller cap names. The Russell, the best count that I believe we're looking at here is going to be the blue count for now. I'm not so much focused on wave 5 of 5. I think we obviously have much higher to go, but I think there is a pretty good 5-wave move occurring here on the small caps. I think there is further to go up here in small caps as we get off the daily down into the half-day chart. I'm not so sure about the subdivisions here from January 4th, the beginning of the new year. That's a pretty big move. I'm looking for a little bit more continued upside here in the Russell. I'm certainly not, looking for any kind of significant correction. Longer term, I love that the Russell's broken out above 1,800. We're only at 2,100. As you kind of back out to the monthly, there's only so much historical data in the Russell. I can't help but think, like the broader NASDAQ, is this some kind of larger corrective wave that is of a greater degree than what we've seen since 2009 low? So is this, let's call it corrective degree, let's say this is a minor and a minor. Could this be an intermediate degree wave B or 2? Could this be the start of a much larger move? Because this correction that we've seen 2018 to 20 counterbalances or overweights everything we've seen since the 09 low. So I am not bearish. Okay. I know there's a lot of stuff hitting in the news cycle on the political front. Obviously COVID is in multiple strains are starting to go. The vaccine is getting out there. We're heading into earnings season. There's a lot being thrown at you, but I don't know. I'm not bearish in here, and I haven't been bearish for a long time. So, the big moves that we've seen with Georgia being flipped, the Senate going blue, we've seen a big move in renewables. So if we take a look at companies like Sunrun, this is a holding I've had for a long time. Really nice breakout there. This is a holding. I like it. I've added to it. I actually have it in my account. I have it in my dad's account. I added that one. Plug Power has been absolutely ripping renewable energy. Let me see what else we have here. Cannabis stocks. We're going to talk about that. Let me just pull over here the renewables and kind of spin through some of the big ones here. Market cap. So this is the watch list I have for the renewable energy. Sunrun is a good one. Plug Power, First Solar. Let's take a look at that one. FSLR. Another big breakout there. Fuel Cell, FCEL. So basically, I think Biden's got it's a huge number. 200 billion proposed initiative towards clean energy. With Senate being blue, I have a feeling, he's going to be able to get that through. So there's been a massive run up there. I like that. And then the other ones that have been big are the marijuana stocks or the cannabis stocks. So I added 2 names there. Let me just go and bring those in here quickly. Pot stocks. I think I need to rename those to something better. But Tilray is one that I added yesterday. It's trying to break up through this 13 area. Looks like we've tried once. We've tried twice. We've gotten through the 50-week moving average. The 200-week is at 28. This is the weekly over here. And then you can see over here on the daily, we're through the 200-day moving average. So it looks like I think there's a lot of air on the way up in Tilray. This is a Canadian-based operator. It's been pretty beaten down. So what we did here in Tilray is we did a 12-22 call spread out in March monthly. So we bought the 12s, sold the 22s, got a lot of premium for those 22s. Pretty amazing. The volatility is pretty real there. So implied vol is good. I got 85 cents for the 22s and paid $3.04 for the 12s. So pretty good $10 spread there. And then the other one that we added was Curaleaf. Okay, so this is still an OTC holding. So there's an act potentially coming down that would legalize the listing of cannabis stocks on the NASDAQ and the NYSE. So that's one thing. So that's on the docket. And also federal decriminalization is a possibility as well. So there's been a pretty big appetite for this. So there's a few things that are going on. And then there's the MORE Act. Somehow I haven't fully got into it, but there's all sorts of legislation coming down to relax regulations, and this is going to reduce the taxes on these guys. And Curaleaf is one that has broken above 11. I didn't do any options in this one, but I just put the stock on. It's something I'm going to hold here for a while. This is the IPO price back here. So we're free from about 12 resistance. The other one that I added yesterday is Sonos, and this is a stock that I've had for a long time. I held it through here. I got stopped out down around here in March. I lost money on it, obviously, to start, but I've since re-entered. Not a great position, but I love the company. It's a Santa Barbara-based wireless home entertainment speaker system. I think home building with low interest rates for now is real. We're seeing pretty good housing numbers. I think a lot of people are not wiring their houses anymore, opting for the wireless. Sonos just bought this company. I forgot the name of it. It's a international-based voice-activated company. So you can speak to your Sonos speakers. It will keep your voice locally, not sending your voice out like Amazon Alexa is listening to me right now in this podcast, sending it to Amazon headquarters and Google Voice. So the privacy issues are being addressed there because Sonos is keeping your voice locally. And I think Sonos is a major competitor to Apple's AirPod, which I don't think has taken off too well. So I can't help but think Sonos might be an acquisition target. I like this. They beat earnings last quarter. I think they were looking for 33, or no, they were looking for a slight loss. They made 33 cents a share. We're reporting here in February. This will be the holiday earnings season. So I like what they're doing there. I also picked up 3 of their outdoor speakers for my pool and bar outside. Those things are great. Rather than spending thousands to get everything wired, just throw them out there and I can light up the whole backyard of my neighbors on either side. So really like what that company's doing. So what I did there in Sonos is I just bought the stock. I got 200 shares just starting, little $5,000 starter position for my portfolio. And I also bought some June 30 calls. I paid $3.12 for those, just small, no big deal. In the event that potentially just trying to catch a buyout, I've always thought that Sonos was a takeout target, and so I just bought some upside calls as a little bit of a lottery ticket. So just 2 small positions that I added, some marijuana, some speakers. I have some crypto. It's just a regular party over here at Trading Analysis. We're taking a break from large cap tech. So that's what I'm doing. But again, I've just been working extremely hard on the 2 main portfolios, a growth portfolio and a dividend portfolio for Inside Edge Capital Management that we'll be launching here very soon. And I'm studying for my registration test called the 65. Terry, Alex, and Bennett are really running Trade Analysis, doing a hell of a job. So I'm sitting back, watching, learning. Guys, I'm going to turn it back over to you.
Much appreciated, Todd. Thanks once again. Yeah, Terry and I were just joking in the background. Terry was asking, pot stocks, is that consumer discretionary or consumer staples? We haven't figured that one out yet. So
that's actually pretty funny.
It is. That was great.
There's so many companies that are crossing the sector lines. You don't know. I think I saw Terry's notes, not to steal his thunder, but I think he's going to be talking about Uber and Lyft and the transportation sector, which clearly they're not transportation stocks; they're technology stocks. You don't know where things fall. So, anyways.
Very good, very good. All right, let's jump into it. We're going to take you into the hard right edge, walk you through the S&P, the NASDAQ 100, as well as the tech sector, and then we'll be back on the other side of this video. All right, good morning once again. Thank you guys for joining us. Let's go full screen on the good old Motive Wave platform and dive into the hard right edge, often our best forward leading indicator. And we are seeing some signs of a potential near-term top, which could suggest a larger corrective pullback is in store. What I like about this corrective pullback that I do think will unfold is that I think it's going to be a great place to get back on board this market. The narrative, the overall investor sentiment going into the March low was extremely bearish. Many thought as we rallied back into April that we were going to see a retest of the March low, if not an all-out break through the low, and obviously that did not happen. Here we are sitting at new highs. It's been an incredible run from the March low. If you take a look at the move in the S&P here, we're talking a 77% move from the low there. So pretty incredible advance that we've had from the COVID sell-off, and we are getting a little bit extended, a little bit tired in terms of the charts here. And I do think this is going to set us up for a larger correction. As mentioned, I'm not bearish at all of this market. I think it's going to be a great place to get on board this market. I think it's going to be something that you should all welcome. And let's get down into the charts and kind of focus in on the three signs that I'm going to be looking for to help confirm the start of that larger correction. So again, looking at the daily chart here of the S&P, we're going to get off the daily, drop you down to the 1 hour time frame. So last Monday, we started off the new year with a rather aggressive sell-off to the downside. The NASDAQ 100 saw about a 3.5% correction. And what was interesting about the correction last Monday is we were looking at the charts with the team and we said, all right, we're selling off in a directional fashion, which based on our Elliott wave interpretation should be a fourth wave position. Now, given the fact that we're in kind of the final subdivisions of what could be this fifth wave, it can oftentimes be a little bit tricky to pinpoint that exact reversal point. So we sold off into support at around 36.72. That happened to be the 38.2% retracement of green wave 3. And what was really interesting about this zone of support is when we got down into that particular support zone, it looks like Motive Wave, okay, the 1 hour chart's just a little slow for some reason. When we got down into that support zone, we were so close to wave count and validation. And wave count and validation simply says if we break south of that particular price level, that chances are this analysis is incorrect. It would violate the rules of Elliott. And that would then perhaps entertain the idea that this entire sequence was just some sort of contracting diagonal. So support was 36.72. If we broke south of 36.45, we would be more safely able to suggest that larger correction. The fourth wave support zone held as we were expecting, and we rallied to new highs. Now, within the post last Monday sell-off price action here on the 1 hour chart, which for some reason Motive Wave is not letting me manipulate. Let's try this. Let's go back over to this chart. There we go. So what's interesting about the post fourth wave move, it's been a rather aggressive kind of angle of ascent or angle of attack, if you would, in the world of aviation. And what we have going on here is since the January 8th high is kind of a period of sideways consolidation. You can see futures were down this morning. We're rallying back just a little bit. And now we're kind of facing that similar situation in that we've got wave count and validation. So 37.37, if we were to break south of 37.37, we would then anchor this fifth wave on the January 8th high. But until then, the markets do still have a clear path to potentially reattack this upside fib resistant zone at around 38.90. So I'm bullish until we break south of 37.37. A break south of 36.45 would then begin to confirm the larger corrective pullback. So this is the S&P. As you can see here, we're pulling back, holding the 38% retracement in green wave 5. Green wave 5, looks like Motive Wave is not cooperating again, but it's all right. You can absolutely see what we're talking about here. So far, this is valid as wave 4 inside of green 5. And I'm going to continue to operate under the assumption that that is the count. I'm not going to be looking to trade any additional upside positions in this particular zone. But the minute we do kind of exhaust this final 5 wave move, I will be perhaps looking to hedge some of my longer term investments and actually looking at a possible long volatility play. Another chart that we wanted to look at is that of the NASDAQ, and the NASDAQ 100 is facing kind of a similar situation in that if we get off the daily and take you down to the 1 hour chart, the pullback into last Monday was not as aggressive in the NDX as it was the S&P, and we're now viewing this as either a sideways fourth wave correction with one additional high left to go, or alternatively, as you can see based on these arrows, we could entertain wave 4 completing on January 4th, green wave 5 then completing on January 8th, and that would then complete this final subdivision and set us up for the larger wave 2 pullback. I do think it's going to be a viable pullback. It's one you should, as I mentioned earlier, welcome and be thinking now about how you can take advantage of it if in fact that does materialize. Over to the XLK, which is has been one of the leading sectors since the March low. This is one of the charts along with SMH semiconductors that I utilized to kind of help confirm the idea that last Monday was simply a directional pullback. Here we are. Let me take you over to the blue count. It's illustrated quite well here. Coming out of wave 4 on October 30th, let's get off the daily and we'll drop down to the 1 hour once again. Coming out of the October 30th low, we have a beautiful 5-wave rally into November 9th. We pull back here in wave 2 and then have a textbook 5-wave advance in blue wave 3. Blue wave 3 has a fantastic subdivision as we were just looking at there. Green 3 is a 1618. Green 4 squares up to green 2. Green 2 is a 618. You can see our color coordinated fib levels that Todd has established after multiple years of working Elliott. You can see all of those very common fib levels associated with this advance coming into play. So now we're facing a situation where, unlike the NDX and the SPX, the XLK failed to make a new high. So that leaves us with one of two conclusions. Conclusion number one is this: wave 4 is anchored over here on January 4th, and the move into January 8th was a truncated 5th wave position. That's the only way that we could call this chart complete and entertain the downside wave 2 in the indexes. For the time being, given the fact that we would have to entertain truncation, and given the fact that we do still see a path to another high in the NDX and the SPX, I'm going to look at this as either a sideways triangle in development. This could also be viewed as a sideways flat or a sideways complex. All three of those fourth wave interpretations are valid so far in this pattern. So the XLK, this chart looks rather healthy. I do think we get one final push to the upside here. Equality of orange wave 5 on the daily chart compared to orange wave 1, which is very common when you have this massively extended third wave, that comes in at 132.76. So the XLK does look good in my opinion for one final push to the upside along with the NDX. So the NDX, we reviewed the, let's use our watch list here. It looks like Motive Wave has given us some random symbols today. With the NDX, if we're going to say wave 5, green wave 5 is complete, we've got to put wave 4 here. We did make a new high. Truncation in the XLK leads me to believe that's not the count. And here in the SPX, we're valid for a reattack of this upside zone as long as we remain north of 37.37. So I remain bullish and awaiting this larger corrective pullback. As mentioned, a break through those levels will help confirm the start of a larger wave 2 pullback. It's a wave 2, so it can take us to all sorts of different retracement levels. And the third sign that I'm watching for, so as we looked at in the video last night, for those of you who didn't catch it, sign number 1 is a completed 5-wave decline in the dollar, which we're in the final subdivision of that 5th wave, along with the completed 5-wave advance in equities, and kind of confirmed based on divergence of this particular market internal. This market internal that we're looking at is the put-call ratio inverted, so it's essentially a call-put ratio. You can see the divergence into the February 2020 high, a beautiful market high, call buying high, everything consolidates, and call buying or market sentiment, bullish sentiment, failed to confirm the new market high, and then we have the COVID sell-off. Here we are once again with a very similar setup in terms of this particular market internal compared or overlaid on the S&P. So are we going to ramp into that final 5th wave, fail to make a new high on this particular market internal, confirm the 5-wave decline in the dollar, and then set us up for a larger pullback. That's what I'm looking for in terms of the kind of the 3 signs to help substantiate this wave 2 pullback. When the wave 2 pullback does get underway, given that it is a second wave position, the best way to help kind of forecast where you might land in terms of major support is await the initial directional pullback. So you'll get some sort of an initial move off of the top, and that initial directional wave or actionary wave, as it's referred to, will be met with some sort of a counter trend corrective wave. That's when you can begin to forecast the secondary decline and more accurately kind of pinpoint perhaps where that wave 2 support might come into play. So that's where I stand in terms of the markets. I do think this is going to be a viable wave 2 pullback. I think it's one that we are all going to welcome. You can see the kind of meandering and overlapping nature of price action as evident in the indexes. So that's it for me. Let's go ahead and we're going to jump to commercial really quick. On the other side of the commercial, we'll be back with Mr. Terry Long, the spin doctor, to take us through sector rotation. So sit back, relax, and we'll be back with you in about 1 minute.
Hi, I'm Todd Gordon, and I can't believe it. It's been 8 years since I launched this business, and what a ride it's been. Welcome to tradinganalysis.com. We're one of the leading education, analysis, and trading alert companies on the internet. We are a team of devoted professionals who trade our capital in a live, transparent manner to show you what the life of a trader is actually like. Keep in mind, this is an industry filled with smoke and mirrors, with cheap sales and marketing tricks, so it's been my mission to run an above-board, transparent, and brutally honest operation to serve our clients in the best way we know how to prepare them for life in the markets. Every single day we offer video and written analysis for the major trading markets, including stocks, stock options, cryptocurrencies, and Forex markets. We offer live and clear-cut and actionable trade alerts in these markets, and they're sent straight to your cell phone and posted in the members area on Trading Analysis. Once the trade is out, we certainly don't leave you hanging. We follow up on every trade, whether it's a winner or loser, and we'll conduct post-trade forensic to show you what went right, what went wrong, so you learn. And very soon, I'm going to be sharing my real-life 7-figure portfolio with our members who prefer the longer-term investment timeframes with some medium-term trading and option strategies mixed in as well. So head on over to tradinganalysis.com after this show is over. Take a trial today and join us at our community. Let's get back to the show.
Hello traders, I'm Terry Long here with your weekly sector focus. Let's start with a look at the performance of the index and the sectors for this first trading week of 2021. Last week's trading began with this big sharp sell-off on Monday, as Bennett explained, only to see a steady rise to new all-time highs. Last week, the energy sector surged 9% higher. Can you imagine that? Now, that was all following an announcement from the Saudis on a unilateral 1 million barrel a day production cut. It was very much a surprise. I don't think anyone else expected it. And that took crude past $50 a barrel for the first time since last February. Now, last week, materials, discretionary, and financials also saw a significant rise, while real estate, staples, and utilities continued to underperform. Now, again, following last week's dramatic price swings, Monday and Tuesday's price action actually has been quite muted. I think that's interesting, with the exception here of energy. Energy stocks again on the tear, up 5%, with crude oil prices now stabilizing above $50 a barrel. I think I saw them at 53 yesterday. I didn't look at them this morning. But on the opposite end of the spectrum, the communications sector fared very poorly, with Twitter leading that sector lower after announcing a permanent ban on President Trump's account. Moving on to our weekly sector rotation. Our sector leadership continues to shuffle as financials, let me pull this back and get that cued in there. Financials has moved up to second and is looking to move into first place. If we add Monday and Tuesday's price action here in the animation, you can see the dramatic thrust forward, not only in financials, but also energy entering the leading quadrant here. For now, our leading sectors are industrials, financials, materials, communication, discretionary, and technology. However, like I said, this communications, if you look here, this communications has formed a nasty little reverse hook, and it is now seen with a weakening trend. Now, although industrials has just now moved down here into this weakening quadrant, I do see very strong support with in terms of relative strength, and the leadership position is still there. The very short tail, nothing to worry about. That just tells me there's a lot of resilience. I'm going to dive into this sector in more detail here in a moment. Materials sector also very short tail, showing a positive rise in momentum, a little bit of northerly hook going on there, but this one is also very stable and remaining hesitant. Now, the energy sector, as I pointed out, the energy sector is rapidly moving up the list as other traditional defensive sectors are seen declining further into the lagging quadrant. Can you believe it? Real estate's now our worst performing sector, along with staples, utilities, pushing lower. Now, healthcare seems stalled as well, lacking any significant momentum to the upside. This week's focus sector is going to be the industrials, and the resilience in this industrial sector indicates to me there's somewhat of a balance going on between leading and lagging industry groups in this sector. To find out the best performing stocks in this sector, we're going to need to drill down a little further. So let's take a look here in the XTN. This is the transports ETF, the XTN. And this is the one where Todd was mentioning Uber and Lyft are listed in this XTN, but I think they're more tech, like you said, they're more just the software and technology stocks rather than manufacturing industrials. But nevertheless, they are leading this group. I'm also seeing several airline stocks in here. They're also leading. So let's see here. The advancing stocks almost are in balance with former leaders, which are now moving down into a weakening trend. So we've got about the same amount of stuff moving up, the same amount of stuff moving down, and that's what's holding you in this resilience here. So the industrial group is broken down into various industry subgroups, and this is how they are categorized. There's a transportation index, airlines, diversified industrials, aerospace, commercial vehicles, marine transport, etc. So you can see from this rotation which are the leading subgroups in this particular sector. Now here's transportation services way out here pushing strongly. All of these vectors have got nice easterly headings, meaning they're continuing to gain relative strength. We're going to drill into the transportation services group here next. That's this one. Let me scroll my notes. This industry group is already deeply rooted in the leading quadrant, as you can see. And it does look very healthy. There's only a couple of stocks in this particular group that are weakening, but the majority is sitting here very strong. This is transportation group. The airline, this is the airline subgroup, right? Look at all these, look at these airline stocks. Very healthy position. All of these in expectation of increased demand for air travel as the COVID vaccination program continues to expand in 2021. This group is marine transportation, and these are names that we rarely hear mentioned, but they are now progressing from the improving quadrant into the leading quadrant. So I like several of these. Names such as Eagle Bulk Shipping, Not Offshore Partners, Scorpio, Kirby, Matson. I've never heard of these guys, but yet we've got the data and we can analyze those and we can see their strength outperforming the market here. This next group here is railroad stocks. Now, these are very common names. Most people here know most of the railroads, but down here in this lagging quadrant, I want you to take a look here at Union Pacific. You see this, I mentioned this, I think, last week or two about the hook forming here in Union Pacific down in this lagging quadrant, and now we've got a nice increase in momentum going on, also with Kansas City Southern, Norfolk Southern. These hooks mean these guys are ready to bring it back around for another run. Finally, I'm going to look at the defense sector here. And even in this sector, even though the defense subgroup as a whole is lagging, and I didn't show you that, but the defense sector on the industry groups was sitting way out here on the left. But even though that defense sector subgroup's lagging, there are many companies here that are in the leading quadrant, with several in the improving quadrant ready to follow this group in. And that's what I was seeing as I was writing these notes. This is what the graph looked like. And now you can see Monday and Tuesday's price action pushing these guys from this improving quadrant over here. You know, really, I could go on and on. There's more industry groups here in the XLI that are doing quite well. They're well positioned to be market outperformers, but I'm going to leave it for now and hand it back to you, Bennett.
Much appreciated. Thank you so much, Terry. And yeah, we saw some comments in the chat about gold and the dollar. Terry, if you could pass the presenter off to Mr. Todd Gordon, he's going to take us through those charts really quickly before we wrap it up and let everybody get out of here. Market open in about just around 4 minutes. So, Todd, presenter is coming your direction.
Sounds good. Terry, listening to what you're saying, I wonder if that's really good airline analysis. And I think you pick up any economic or fundamental textbook, they would say input costs, oil, would have an inverse relationship to the performance of airlines. You got to think that they're going to be directly correlated now. Is demand on the demand side is starting to be priced in that it's on the increase. You got to think that airlines would fall behind. So I got to think they want to trade together. I don't know if their mic is still on. Any thoughts on that?
I'm here. Yeah, that's very, very possible. I mean, energy costs are a big fixed cost for the airlines, obviously, but they certainly, if they get the customer demand for the air miles, and they have relatively cheap fuel, then their margins will come up for sure.
And then I think we got to do a deeper dive too. Some have already hedged, and it's a sunk cost, as you mentioned, in terms of their hedge with their fuel costs. Some have, some haven't, and I think that will determine the volatility in there. But I don't know about you all, but I'm getting a little itchy to travel. I love being in Saratoga Springs, but I'm ready to travel. I love my family dearly, but we got to get out of this house. They're driving me nuts, and as I'm sure I'm driving them nuts. All right, so
it's going to be a big surge once everybody does decide to go traveling and take their vacations. I think it's going to be a big surge, and we didn't talk much about Carnival Cruise Lines.
It's going to be a huge surge.
And all of those, but yeah, they're gonna have their day too.
And you know, I've got some airlines. I've got some United credit cards, like my business card's United, and then I've got the preferred Chase Sapphire that feeds in. Like, I got airline miles. Like, I almost got to change credit cards, so I don't want to accumulate any more airline miles, because to your point, like, I hope they're gonna let us use them. I don't know. I'm ready to travel. Anyway, so I'm gonna try to step in for Alex here on the macro. You know, a lot of people asking for Alex down there in the quotes or in the comments. Listen, he just got too big time for us. We couldn't, you know, he needs a bigger stage than us. So he's got his own show tomorrow. What is it, 9 a.m., boys?
Yep, 9 Eastern.
9 Eastern. Alex has got his own show. He's going to hit you with macro. He's going to hit you with crypto and dollars. So I'm just going to give you a taste here real quick. Gold, look, I don't know why everybody is so obsessed with gold. I don't know. It hasn't moved in 4.5 months. It's had a really nice move here from 2018 to 19. Best that I can see, and again, I've been a little out of the game here for a while, but we're hitting the upper fib support of the pullback in gold, starting to look interesting. Again, when you have, trillions being thrown in stimulus packages and credit being created, the Fed hitting Control P, print on the keyboard as much as they are, you expect gold to be ripping, and it just doesn't. So I don't know. I'm not overly excited, and I don't understand the fascination with gold, especially with what's happening in Bitcoin. But as we get lower here on the daily, this is clearly complex, coming down from August 2020, some kind of ABC and W, big old funky, some kind of connector and X. It's almost impossible to count this in real time, which is fine. Then once you start to get evidence that support has been found in one of the fib support zones, which is at current levels, right around 1850 or lower down at 1650, as Bennett said earlier, once you get that smaller degree 5-wave move up off the lows, that starts to suggest that a low may be found. But this Y wave for me looks premature. I don't expect 1800 zones to hold. I expect we'll be down here to 1650. Bennett, is that the house count that we're looking at right now? Is that roughly accurate?
Yep, absolutely.
Okay. Dollar is even more funky. Again, with everyone saying the coming imminent collapse of the dollar, which is the predominant narrative, I kind of chuckle because I look at this and say, what collapse? Where is it? We're still well off the lows ever since the credit crisis low, 1, 2. This is very funky in here. We've had a lot of discussions internally at Trading Analysis what this exactly is. This is my interpretation. This is a pretty large wave 4 compared to 2. Again, when something should be happening in the market, we should be significantly lower with the Fed creating and the government creating so much credit in the form of stimulus. The dollar should be breaking through these support levels, but it's not. This is a quarterly chart down to the daily. Oh, that's funky. So, certainly this is a decline that we've seen here in the dollar. If this is complete or not, I think we're looking for potentially one more low into the dollar. So, we'll see. I think this is 1, 2, 3, looking for wave 4 to complete 5 of C of 4. And then we could see a dollar rally, which is completely contrary to what everyone is expecting. Crypto, I've held crypto forever. I've added more. I bought my first crypto, guys, at about $330. I still have some. I wish I had a lot more. I added some here into the high 30,000s. I did add some into the 40,000s. So, we're looking at several accounts. Alex is obviously going to take care of you tomorrow, but let me start even from a higher than a daily, show you where we are. This is one interpretation that we're looking at. If the wave 4 ended here, or if it's some kind of triangle, remains to be seen. I'm more focused on the move from March 2020 up 1, 2, and we're still in the midst of wave 3. The 100% relationship of orange 1 compared to 3 was at 31,000. We're through that, and generally that's a bullish sign. That usually suggests that we'll get to the 1618, which is at 63K. So within the weekly, we'll get down to the daily, keep that 63K target for orange circle 3 in the back of your mind. And there she is right there. Orange circle 3 breaks down into 5 smaller waves, which I think is this. Orange circle 3 breaks down into blue 1, 2. Ongoing blue 3, yet to have blue 4, blue 5 to complete 3. Let's break parentheses Roman numeral 3 down from the daily, go down to the half day. This is where I think we are. So 3, 4, 5 of higher degree 3 into 63K. Everyone's saying, oh my God, 124 billion in market cap wiped from Bitcoin. Disastrous, tumultuous drop. Dude, it's like a 25% retracement. Like, that's so garden variety. It's a riot. So the fact that we just held down here, green 4 from a time perspective, we're still a little shallow here. 100% time retracement was January 13th, which is today, actually. That's interesting. 1, 2, 3. So equivalent time is this. So we might have a little bit more messing around here in wave 4 for another week or two before we eventually head up through the 40,000s to start. So I still hold Bitcoin. I'm still bullish. I'm looking to add some Ethereum, Bitcoin. Where's that cross? We'll take a look at that. Again, Alex is going to get us straight on that. Ethereum Bitcoin relationship is dropping fairly sharply. So Ethereum is underperforming Bitcoin. Bitcoin seems to be the strongest crypto here by way of the cross. Ethereum is weaker than Bitcoin because Ethereum Bitcoin cross is dropping. And just like that, we are caught up on the updates. We are seeing a pretty good drop in bonds, which probably is more reflective of, I don't know, they're trying to convince us that inflation's coming down the pike. That's been kind of the narrative for 10 years, 12 years now. So we'll see if it actually begins to happen. Could be a credit quality issue, bonds dropping. We'll see. I'm not really seeing it in the dollar. I'd want to see bonds and the dollar drop simultaneously to confirm that's the case. But we're looking at a little bit of a wave 2 pullback in bonds, a little bit more action in fixed income. Rates are moving up. Financials acting well, specifically those small cap financials. I added Zion Bank to my portfolio, did that in CNBC. Regionals acting well. KRE is the regional bank ETF doing well compared to KBE, which is the large cap bank ETF. So financials getting a little bit of a bid. Financials acting well even on the XLF as rates are moving up. And that's, I think, a wrap for the macro. Let's see what's going on here in the open. Terry, Bennett, what are you guys seeing here in the open? Real estate, Terry's leading it out of the gate, followed by utilities, tech, discretion.
Well, you
energy.
know, dug a deep hole. It's longer term out underperforming, but it's going to have periods where it makes a recovery.
What was it up?
We saw numbers.
What was it up yesterday? I mean, you said 6% in a week or something. No, that was energy. Excuse me.
No, yeah, real estate was down. Real estate was down last week, or let's see here. Yeah, last week it was down about 2.5%, and this week it's all down 1.6%.
Okay.
So that's what, about 5% from last week till today. So yeah, it's due for a little bit of a bounce.
Yep. Then you can see on the industry groups, construction, REITs, industrial and office REITs, and then down to automobiles, consumer finance. So obviously getting a little bit of a bounce in real estate there. So it's been quiet. Earnings season starts Friday with the banks. A couple weeks out will be technology. Earnings are expected to be down from last quarter, which is fine, and that's a very seasonally expected event. But earnings for 2021 are being priced in with pretty strong, actually. So we're expecting strong earnings growth next year. Other news that's mention worthy is Intel just announced that they replaced their CEO, and Intel is getting a really big pop. And it's funny, I just put Intel in the portfolio. I don't own the stock, but I put it because I wanted to get it. Had like a, I don't know, 4%, no, 2.25% yield on Intel, and it looked like it was trying to hold these 45 lows. I think they're finally capitulating and starting to outsource their chip production. They're trying to do it in house, and I think that's a good move. So I think Taiwan is a big name, strong move, pretty good yield on that. That'll be a holding in the portfolio as well. TSM's doing a lot of AMD's work, right? Some NVIDIA. Maybe some Intel. And are they assisting in the M1 chips, Terry and Bennett? Apple's chips?
I don't know about that, but
okay.
I did want to comment and say hallelujah on the CEO replacement. Intel's been one of the biggest outliers in the semiconductor subgroup. It's all the semis are up in the leading quadrant mostly, except Intel sitting over there in the lagging quadrant. And so I think it's probably oversold, and this is good news. The company's going to get new direction, and it'll come back around. They'll recapture their business model, and but there's a lot of competition if Apple's going to go make their own chips or design their own chips. It's a very competitive market in the chip store, but there's huge demand. And and I think that's where they'll fill their void.
Yeah, so Apple actually designed the M1 chip. Taiwan Semiconductor produces it.
That's what I thought. Yeah, and that's what Intel's going to do as well. They're going to design and then produce it, and they're going to outsource the production. And it's funny. Not to keep this going, I've got a 2017 MacBook Pro. It's getting slow. I edited a lot of the videos I do for CNBC. Well, speaking of, I'm on CNBC today at 2:30. I don't know. Do I get rid of it and just do a late 2019 MacBook Pro, or do I wait 3 to 4 months or whatever it is to get the new one? Tell me what to do, guys. I'm not. Obviously, I know just enough to be dangerous. Should I just get late 2019 with the Intel chip, or should I wait? I don't know.
Never buy the first thing. Never buy the first generation of anything. There's bugs in it.
Okay, I mean, that's true. And the thing you like about Apple is, yes, you pay a premium on it, but the secondhand market, the resale value of an Apple product is so high. It's amazing what you can get. It wouldn't be a big deal if I get it for 6 months or 9 months and then sell it and get the new one, right? Would that probably be the smart thing to do?
Yeah, that's probably the route I would go if you're in need now. No sense in waiting.
And then Bennett build me a nice trading PC. How's that coming along, brother?
Good. I'm just waiting on the case to show up. I've got all the other parts over here in the corner of the office ready to go, so I'm excited.
Bennett builds unbelievable trading computers. What's your starting price? 10 grand?
Message me.
He's a smart dude. Okay, so we'll leave it there. That was fun. Thanks for having me back, guys. Intel up 9.5%. That's interesting with that CEO news.
Crazy.
So, guys, catch Alex tomorrow. I'm going to leave it there and turn it back over to Alex and Bennett. Or sorry, Bennett and Terry.
You were thinking about his show tomorrow. That's why. All right, guys. Hey, I appreciate it. Thank you guys so much for tuning in. If you did enjoy the live stream, please give it a thumbs up, subscribe, turn on notifications if you want to stay up to date. It helps the YouTube algorithm distribute it accordingly amongst this industry. So thanks again. Check us out at tradinganalysis.com. Members, we'll see you in about 20 minutes for the member webinar. And YouTube, catch you guys next week. Be safe, stay healthy, and we'll see what the rest of the first month of 2021 has to bring us. All right, guys. See you, Todd. See you, Terry.
See you guys. Thanks.
Catch you guys next week.